Hey guys, welcome to my channel. So today I'm going to make a video after a long time. First of all, I'm working on a product which is uh, why I didn't post any video. So basically, I'm working on this product. It's called Teja. So Teja is basically a application which takes the help of AI and personalize your daily habit formations or mental health or personal wellness. So it's basically application driven towards that. So this apart, so I'm working on this application. I am making this application. So that's the reason I couldn't actually dedicate some time in making a video for a long time. Now since I am here, let's continue on the application, on what we are going to do. So today is 1st of December, so I have to anyway review my entire portfolio and go through it, and whatever decisions I've made I have to clear that up first. So yeah, and also I'll show you my positions which I carry, but first let's go with the main thing with the market. So how the market is doing for the next 1 month, or what is the things, how are the things looking like. So coming to S&P Global VMI, this is the performance of month to date. So how it has done in overall November is from 1st of November to the last of November, the month to date return was 9%. So actually the performance was really good. So now what we are going to do is we see whether it's acting as a support or resistance right now, because this is BMI. Usually there won't be any huge movement for years. This is an entire global BMI. So usually there won't be so much of a movement in this. So if you see, it's a stable investment until COVID hit. So then it recovered, and now if you're seeing, it is already in the same baseline which continues like this, right? So we are on the peak right now, and all 10 years return was almost 6% annualized. So yeah, now if you are seeing here, we are almost on in the 3 years chart, we are in between. Now the main thing is we're not still not in, we have crossed, we have taken the support and it's going up. So there is an immediate resistance at 350, and it has to take again some, I think it would be flat for the next 1 month. It might not go up aggressively, but let's see. That's entire global thing. And news and research, there will be a lot of things are happening. Yeah, so India is one of the case where they considering to for diversification. So there'll be a lot of money pumping in to India, specifically in debt, not in equity but in debt. And apart from this, let's continue with the remaining things. Even gold as an asset has improved at 3% this month, and if we are seeing it, it is almost on the top. So I don't think it would go down right away, but it will be flat in this price from the gold will be from 1000 to 1250 is what I think it would be, because the entire globe is in a flattish mode, not in a bullish or bearish mode. Apart from FEC equity has done really well the last month. So yeah, this, so both BMI and gold are doing well. And now coming to the oil future has reduced from around 80 to 75. This is a good thing where people have much buying power of oil right now. So all the countries, including India, has a good position right now. So basically this price is competitive. If it reaches $100, right, it would be extremely hard. It has reached in between, but India was in extreme trouble when it reached 100. Now it's a safe area. We are pretty much in a good area. If it is in pre-pandemic levels is what I think. Yeah, it is in basically in a pre-pandemic level where we had this price earlier. But yeah, if you see this is a good price to have right now. So when we have seen the global BMI, this is the emerging market. This will have both India and China. This is doing 7%, whereas the mixed BMI has done outperformed the emerging BMI. This indicates that the stability is towards the developed economy rather than the emerging economy. So even this has gone up, but the performance of global BMI was really high than emerging. So I think the money is still going to the developed markets than the emerging markets. So this gives a clear idea where we are basically in a flattish mode since last 3 years. If you see 5 years, nothing has moved. It is always flat. So I think even for next 1 month, we might not be doing so well, or we can come down, because December usually, let's see the pattern, right? So if you see September to December, it goes down, and December, October, November, December, if you're seeing December is usually flattish because no one wants to work really hard on the December months. They don't want to move the markets during the new year usually. So that's where Decembers are usually flat. What all these factors clearly specify is the risk is not so high. It is basically, the risk is not practically there for November, but at the same time December might be flattish because the move was aggressive in the November. So I won't be placing most of the bets in a bullish directions in most of the stocks. This is globally, so globally risk is neutral. So that's what we found out of all these things. And if we notice, the metal prices haven't moved anywhere, so we don't have to care about this. So, and they're at a decent enough price, but also we have to remember that they're costly right now. So this is if this is down, then it's good. But yeah, let's hope it's here right now. Again, what I meant, it's good when it goes down, is it's uh, so for consumers or whoever is consuming this, let's say for example automobile and other guys, it's good for them, but it's bad for economy. Usually this means whenever this is down, it actually means that the consumption is going down. So this is a clear indicator that since last 1 year this has been going down, and since November to December it has moved up, but it's again flattish. So here is where this has a correlation with the growth. So we just have to wait and see if once this starts moving, it's basically economically we are in a good shape. But if you're seeing, right, in 2020 it was extremely low, and it has boomed again from 2022. It has dropped further, and if you see, it's flattening here, and here I think if you see, if we go to the max, so it comes here, it takes a support here, and it flattens and then goes down. The same is the pattern commonly seen where there was a sudden drop if when the recession happened 2008, and then now it's normalizing, but I don't think it will fall further. But just we have to keep an eye on this every month, whether it's bullish or bearish. So if you're seeing last let's keep an eye on last 5 years. Since 23, this year it has been dropping. So actually this indicates that we are not in a growth phase anymore, right? Not just this year, but even in the previous year. And again, I'm talking from the global perspective, not from an Indian perspective in all these aspects. Again, now let's go to this one where we are seeing S&P Global Indian Manufacturing PMI. This basically is where we see the purchase patterns of the market and how it's defining here. So what happens is, here if you're seeing this one, the expansion in factory orders and production strengthened. That is good news. Firms scale up input buying, these two are a good factor. So basically this clearly indicates it's going up, but input cost inflation slips to this one. So uh, I am not sure whether this is good or bad right now. Just look into this. So here are the things which would happen because input cost inflation slips to the 40 months low. What would happen here is basically the reduction of the production cost. The inputs which are taken usually are available at a lesser price. This will basically increase the profit margins if they don't pass it on to the customers, but also signifies that the input cost is less, so the demand of raw material is slowing down, right? Because ultimately there are no buyers who are going to buy for this, so it signifies it's slowing down again. This will have a there would be difference across different segments. So let's say if let's say Tata Motors and Tata Steel, for example, Tata Steel produces steel, so the raw material, that is the steel, would be available at a lower price. But if even if Tata Steel acquires that and then there's no buyer to buy in, so there will be a skewed nature here where I have more raw material assets sitting in my place and I'm not able to sell it. So this will be a small short term to long term indicator, but cyclically this might have a good effect on those industries which are going to procure a lot. So that way the monthly significance is we are at a low cost where the supply is going to be high. So here where what we should be looking into is some companies where they need to procure a lot and at a lower price. Once the price peaks up, and storage is important here too, and once the price picks up, they're going to sell it at a higher price. So this is what companies we have to look into. So if you're looking into all these parameters, right, we are seeing a pattern where it's going to be more flattish rather than going to be a downfall, because every country has managed this after COVID. Whatever inflation we had, it is a good fall. The markets have really corrected well. It was not aggressive. Everyone was careful in their investments, and the world has been ready for this kind of environment. It looked like that. So this time it was a good soft landing for many, but ultimately many got there was a huge impact on jobs and other things that's taken. But the maintenance of this is so far is really good. But let's see how the economies continue from here, because now is the time where we go flat, and next year it has to really pick up. Otherwise the world might not see the same growth as earlier. Now coming to the favorite part of treasury and the inflationary measures which we have to be counting on. So here I'll just see the max. So if you see, there is a pattern always which we have noticed whenever there is a sharp correction. So far it has always been down, right? If you see all these months, when there was a huge move up and down, we had two huge recessions here. Then there is 2008 which happened, and now if you see, every time it has gone below this figure, it had a huge impact. That is treasuries, where people tend to invest in long term bonds more. So if you see, this is again recovering right now, and the immediately once it recovers, it has a impact on the market, and also not just the market but entire economy. So right now it is trying to touch the zero mark for November. If you see, from July to November it has grown. So this entire 1 year it was at okay. So if you see here, from last month to this month, from November it is going down again, not up. So this is actually volatile, but ultimately we shouldn't be seeing this on daily basis, not even monthly basis. But yeah, on a quarterly basis this might make sense, or yearly it might make sense. But if you see, it's still down, it's not touched the zero mark. So once the zero mark is touched, we have to watch this much closely. But we won't get this data and this data is not updated on day-to-day basis, so we shouldn't be caring much about this right now. So again, we are going to see the repo rate, and repo rate hasn't changed a lot. Has remained the same. It is at 6.5. It has gone up the last year, and this year it has remained the same. So this indicates that we are stable. At the same time, if you see the other patterns, this has clearly impacted the entire cycle, this year's cycle, where since last year to this year it has impacted us, and with this there is a slow growth in the economy. But once the repo rate reduces once again, we might see a better opportunity overall. So yeah, let's continue. Again, if we see here, the unemployment rate has to go up, is what was thought when the Fed announced the interest rate hike. But now it is again in the flat zone. It is not going. That's a good news for employees, whoever are employed so far. But again, this is an indication that if this is going good, the inflation is slowing down. That is what this means. So if you see in 2008 crash, right, the unemployment rose, and then it settled, and then it came down. Even now in 2000 it is coming down. But if you see, the rapid pace of its growth and decline has come at the same pace. But now this is a rate, right? So yeah, so if you see, it's at 2.5. So we are expecting around 4 to 5%, but that's not happening. It's going again, it's a slow pace. So I think here also we are in a safe zone right now. But the entire US economy is still not completely sure. We are not sure about that, apart from AI taking up and a lot of things switching really quickly, and the entire tech side is moving really faster than expected. But the economy of its growth are really slow compared to the advancements of the technology. So both are not going hand in hand. So that's why I'll still be flattish. So I'm not. So with all these data which we have, I'm still thinking mostly on a flattish view than going bullish or bearish right now, based on all these parameters. But when we have seen the other parameters, like the growth parameters, it's not actually showing a good sign. And also the input costs, but raw material turning up into the actual thing would make a lot of sense, right? So I'll be pessimistic right now and not go aggressive there, and I'll be flattish. I'm not even bearish right now, I'm neutral at this point of time.